Hello everyone. I know yesterday everyone tired of hearing HDFC Bank's biggest drop in Indian market, but unfortunately it's going to be another day we have to hang on with HDFC Bank. On Tuesday night HDFC Bank ADR dropped around 6.5% in US after their earnings results. In response to that, yesterday in Indian market it dropped around 8%. On top of that, last night in US ADR it dropped additional around 9%. So together in the last 2 days HDFC Bank ADR dropped 15%, whereas in comparison in Indian market it dropped around 8%. So there is a remaining 8% on the negative side. As I said in the last pre-market video, today also in Indian market, there is a remote chance this additional 8% drop may not happen at all, since the dollar premium arbitrage might get just balanced like any other Indian ADR stock. And there is a high probable chance it may not be. Like yesterday, the negativity from ADR will completely carry forward to the Indian market. In that case, we can expect HDFC Bank to crash another around 8% today in Indian market as well. Anyway, enough about price action. Now let's understand why and how much it impacted yesterday to the whole market so we can judge its impact today. We know and we discussed this. They said they are going to increase the number of branches to 11,000 from present around 9,000, and the demerger of fintech business, which were all negative since it's an extra unnecessary capital expenditure, no denying that. In addition, now imagine a situation where someone gets caught by doing something wrong, then people will start to look at them very closely at everything they did, like they're kind of under microscope. And this kind of scrutiny can also add further negative effect. That's the exact same thing now happening to the HDFC Bank. Again we discussed this top line financials already in the last video. HDFC Bank's net interest income came near 3% below the expectation, whereas on the positive side, the net interest margin came in line with the expectation and the net profit increased over the expectation. Here is where the problem is, how they achieved that net profit and net profit margin. Some of us heard this term called LCR, liquidity coverage ratio requirement. Just for everyone's benefit, LCR means that a bank must have enough liquidity assets like cash or easy to sell investments to cover any money the depositors might withdraw over a month. Simply, as per RBI rules, all the Indian bank should hold cash in hand on their respective bank that the cash outflow from the bank equivalent for at least 30 days. Having that much cash in bank is riskier and also that money won't do anything. So most of the banks and including HDFC Bank, they have that LCR requirement as easy to sell investments, mainly on the Indian government securities. And for all the history of HDFC Bank, before this December 2023 quarter, they never dropped this LCR below 120%. Now, as per Macquarie Capital, in order to attain the profit margin and profit, HDFC Bank sold 1,200 crore rupees worth of government securities and added the amount 1,200 crore rupees in the quarterly profit, which in turn reduces the LCR down to 110%. Basically, HDFC Bank attained its profit margin and profit by selling the assets rather than expanding the business. So that's the next revealing cat from HDFC Bank bag. There is one thing for sure, market never accept the manipulation, which is why it's still dropping. Now everyone like CLSA rating and Morgan Stanley all flagging this as warning, whereas Nuvama Investment gone one step above and downgraded the stock. So that's the new story about HDFC Bank. Now coming to the yesterday's impact. Out of 2060 points down in Bank Nifty, above 75%, near 1600 points negativity just comes from HDFC Bank. So it's obvious when one single stock pulls the index by over 1600 points in one single day, there is no way in the same sector other banks can support positively, which in turn drags the other banking stock in the same index to drop from 1.5 to 3% each. Because of all this banking weakness, from 14% HDFC Bank negative weightage impact, it snowballed into 37% weightage impact on the Nifty index. Please have a look at this yesterday's Nifty contribution. Out of this 460 points drop, 330 points drop just comes from the top 4 private banks. That's how the impact was snowballed despite for the fact IT sector closed positive. So today if HDFC Bank drops another 8 to 9% means like the last night ADR drop, then most probably we can expect the same snowballing effect same as yesterday. Then about other areas, only Infosys closed marginal positive, ICICI Bank dropped another 2% and Wipro down by near 1%. In line with that, at some point GIFT Nifty dropped below 21,400. However, it recovered some in the end, thus early morning GIFT Nifty closed at 21,470. Considering no premium, for now it's indicating 100 points gap down opening today. Then coming to US, last night before their market opening, Census Bureau released the December month retail sales data. I mean on both cases, month on month and year over year, retail sales in December month increased compared to the November month and also it exceeds the expectation. As a result, the chance of rate cut in March month dropped to just 50%, which was near 80% 3-4 sessions ago, which in turn increases the 10-year bond yield further to above 4.1%. Thus, all three US major index affected negatively. In the end, Dow Jones down by 0.25%, S&P 500 down by 0.56%, and Nasdaq decreased 0.59%. In case of VIX, it increased above 6.5% and moved near 15 from around 14 yesterday. Whereas oil haven't changed much, but this bond yield increase again impacted the gold by around 1%. At the time of this video, WTI crude oil trading around 72.5 US dollars per barrel, whereas Brent crude oil is at 78 US dollars per barrel. In case of gold, it trades at 2008 US dollars per ounce. Thus, as a summary, HDFC Bank ADR dropped another 9% and GIFT Nifty indicating the gap down opening of over 100 points, and to make the things worse, US market also closed negative. So everything points towards the repeat of yesterday. This is when sometimes market do the exact opposite things. Hence, let's hope spot market won't react that much negative as GIFT Nifty and Indian ADR implies. Moving on, yesterday as per stock open interest, obviously HDFC Bank, Kotak Bank, IDFC Bank, IndusInd Bank, AU Small Finance Bank, Ramco Cement, SAIL and Asian Paints got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Oracle FinServe, BHEL, Apollo Hospital, Birla Soft, Tech Mahindra and Gujarat Gas got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, IndusInd Bank, Jindal Stainless, Polycab, South Indian Bank, India Mart and Intermesh are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, not much that I know before and during our market hours, but after our market close for US, lots of housing related macros like building permits and how many house they start to build, etc. Philadelphia Fed Manufacturing Index, crude oil inventories and weekly jobs data are the important items we need to keep an eye out today. One more thing, yesterday FII turned as mega net sellers. In my pre-market history for the past year, I never came across this much amount of net selling. Anyway, yesterday the net sold for 10,580 crore rupees, whereas DI to some extent they supported the market as they net bought for 4,006 crore rupees. Coming to technical, yesterday Nifty opened a gap down of 385 points and throughout the day there was an intense selling pressure and then it dropped 460 points in one single day, which was the biggest single day fall in the last 19 months. Thus, on the daily chart it formed a bearish candlestick with long upper shadow indicating the higher level selling pressure. In addition, now it had a decisive break below 10-day and 20-day moving average, whereas the daily momentum indicator has triggered a negative crossover. Thus, both price and momentum indicators are pointing towards more weakness. To stabilize, now Nifty has to remain at least range bound by taking support at the zone 21,550 to 21,450. A slip below this support can extend the correction to 21,350 to 21,300 mark. And as long as it trades below 21,700 zone, we can expect the sentiment to deteriorate and increase the weakness. In case of Bank Nifty, it was the reason behind the carnage. Bank Nifty opened 1,550 points gap down and on the daily chart it formed a bearish candlestick pattern with long upper shadow similar to head and shoulder formation. In addition, on the negative side, it fell below the 38.2% Fibonacci retracement and decisively closed below the 40-day moving average. And the daily momentum indicator has a sell signal. Thus, like Nifty, both price and momentum indicators suggesting more weakness from short-term perspective. Immediate support is at 45,900. A drop below 45,900 could potentially initiate a further correction towards 45,500. On the upside, resistance is at 46,350. Regarding options open interest, the maximum call option open interest was at 21,800 strike, followed by 22,000 and 22,100 strike, with new call option writing at 21,800 strike, then 21,700 strike. Thus, the options data indicates that 21,700 to 21,800 is the likely hurdle on the higher side. Whereas on the put side, the maximum open interest was at 21,000 strike, followed by 21,500 and 21,300 strike, with new put option writing at 21,000, then 21,100 strike. Hence, 21,500 is expected to be the immediate support for Nifty. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.